Hello, ladies and gentlemen. Welcome to this interesting panel discussion on scaling up NBFCs for future. Considering the credit story of India, the scope for NBFCs is huge, but they are going through major competition from the FinTechs. What will build the future of NBFCs is how they scale up digitally. This session, ladies and gentlemen, we have with us top enterprise technology leaders who will explore to what extent will digital help them to achieve the next level of growth for NBFCs. So without further ado, let me introduce you to our panelists today. Our first panelist of the day is Abhishek Sharma, who's the CDO at L&T Financial Services. Welcome, Abhishek.
Thank you. Thank you.
Our second panelist is Durgaprasad Swaminathan, who's the EVP and CIO at Cholamandalam Investments and Finance Company. Welcome, Durga.
Thank you.
Our next panelist is Milan Dolansky, who's the CDO at Home Credit India. Welcome, Milan.
Thank you.
Our next panelist is Balaji, who's the CTO at IIFL Group. Welcome, Balaji.
Thank you, Varun.
And last but not the least, we also have with us Ajay Koul, who's the country lead BFSI at AMD. Welcome, Ajay.
Thanks, Varun.
So let me just set the ball rolling with Abhishek. Abhishek, there are a number of challenges that NBFCs face today in terms of operations. But what are some of the main challenges that you feel can be overcome by inducting digitalization in NBFCs?
Thanks, Varun. So, as you very correctly said, there are a whole lot of challenges. The way we have approached is digitization of our process. There are two ways to do digitization. One is towards direct to customer. That's a journey that we have not yet begun. In fact, perhaps in next quarter, that journey will begin. Till now, the focus has been completely on the process part. Now, what we are trying to do is if we break the lending process into various small buckets, there is a process which is around lead generation. That is something that we have been able to tackle. Then there is something which is around identity verification. It is there that we have used digitization to a large extent, making it completely paperless and stuff like that. The third, where perhaps we seem to have done the most important amount of bit, is around credit underwriting, where we have made the 100% of retail credit completely algorithmic, non-existent underwriter. Today, credit team is much more into policy, is much more into portfolio governance, much more into finalizing the guardrails. But that has been enabled through this particular backbone. Servicing is a journey that we have around 6 months back begun. So it's starting showing its results around that. And last but not least, collections. Now, collections still is a bit of WIP as far as India itself is concerned, because we still remain to be a reasonable amount of cash dependent economy. But yeah, initial success is there. But I guess all these processes and all these sub steps of the overall lending journey can be broken into smaller parts and can be digitized, can be made paperless. That's what our attempt has been. A reasonable amount of success till now. But at the end of the day, customers are the judge, and we will leave up to them.
Excellent. Thanks, Abhishek. I think that's a lot of initiatives that you're working on, and good to hear that story. Durga, coming to you, we'd like to share your perspective on some of the initiatives that you are taking on the digital front.
Sure. Yeah. I think Abhishek beautifully covered the core areas. I think the process digitization and the move towards digitizing the payment part, and obviously the whole shift towards paperless. I think those are the key aspects that a typical financial institution in the lending space focuses on. I think from a pure challenge perspective, if you are a traditional NBFC with a lot of legacy systems, the typical challenge we face is more and more the NBFC space is becoming very integration heavy and partnership heavy. So you will be either going out and partnering with somebody to do a identity verification or a bank statement analysis on one hand, and you could also be, let's say, if you talk about us as a vehicle finance organization, we do a lot of partnerships with manufacturers, dealers, and all that. So making sure our agility to really integrate at speed is, I think that's the key part. That's a challenge which legacy organizations typically face, and that's an area where we've been focusing on to say how do we become more agile, more ease of integration for our ecosystem partners. And because if you don't do that, you will have, smaller, nimbler fintechs coming in and start disrupting and, taking away, our typical bread and butter side of it. So that's one big part of, challenge we face and where we've been focusing our digitization efforts on. And like I think Abhishek covered, the three key pieces we work from a digital journey perspective is, digitize the aspects of the person. So which is basically the identity verification, the financial viability, and then the underwriting as part of the onboarding piece. And then we go ahead to say, when I do a payment transaction with that, how am I digitizing more and more of that away from a cash based piece? And the third part is, as a lending organization, you will have, agreement, all those pieces. How do you shift that to a paperless? So those are the three key blocks that we end up working on to say, do all of that in a seamless fashion. And obviously, that's been a relentless focus for us as an NBFC.
So I think you raised a very important point around agility, and that increasingly is becoming a challenge. And taking cue from there, let me bring in Milan. Milan, the regulatory framework has become stricter than ever, and the cost of borrowing is also increasing. So it is obviously necessary for NBFCs to sharpen their business agility. But what are the ways in which you can actually be more agile, given companies have a lot of baggage that they bring in?
Obviously, if you are not a startup, then you are coming with some legacy systems, right? With some legacy procedures. And I think what we are facing, and everybody who is for a while on the market, you have to deal with those first to be able to become agile. So actually rebuilding your architecture to becoming orchestrator of the services is critical. We embarked on the journey already a while ago. So we are now near to completion. And we choose to start from the parts which are facing the customer and then go inwards. So we are actually for a while already lending fully online, which bring additional services, which has to be 24/7. Like historically, nobody expected to get a loan over the midnight. These days, the expectation of the customers from the online world are becoming basically that all the services which are presented in digital space should be available 24/7. And that actually forces the NBFCs to a certain extent to become 24/7 if you want to fulfill the the expectation of the customer. And for us, actually, the big challenge which we overcome recently is to automate the internal processes and become fully automated on the side of the lending. So from the point where the customer starts his application or her application till the disbursement of the money, ideally, nobody is involved who needs to count the working time, because the servers happily don't need to. So that's one of the biggest challenges which is there, I think, in front of all of us.
Does that also bring in more compliance challenges, automating large number of processes?
Obviously, because our regulators, as everybody else, want to understand what we are doing, and as you are bringing new technology, which is maybe first time implemented, then you need to reason and you have to find the common ground with the regulator. What is actually what is acceptable, what is not acceptable, where we are going too far in challenging the status quo. But I have to say, so far we are always able to find the middle ground, and that is keeping us to move forward.
That's excellent. Balaji, coming to you, we heard about how Milan is working on being an agile organization, and I'm sure you're doing your bit to make sure that your organization is also highly agile. But one of the things about agility is application performance, and this has become a very critical issue in the digital world, where unless your application performance is top notch, you can't really be an agile organization. So how are you really addressing this challenge?
I agree with what Milan did say, right? So digital doesn't mean that we have a system online. Digital also means that the systems are actually honestly working 24/7, not go off at midnight for some maintenance, right? That's one part of the whole problem space. But then the other angle that it brings in is that every customer is serviced to their satisfaction. For example, when a use case is executed by a user and he or she faces a error in executing that functionality, then that customer is not serviced. If they have to call up a call center or write an email, right, then that is not digital servicing. That then goes through the manual loop. Anytime a loan application or a service request is sitting on somebody's desk, then there's a cost associated, because so not just with the people cost that it adds in, but the customer satisfaction and the number of customers that go through that cycle, their turnaround times increase. Right. So performance, yeah, we performance of application, not in terms of being able to scale applications. We have been on cloud for last 3-4 years, which means that we have auto scale capabilities, being able to use. DR was much more easier on the cloud rather than on-prem, etc. But there is incessant focus on ensuring that every single request that goes through is serviced in less than half a second and is not failing, right? So our failure rates are monitored every hour in terms of how many requests are failing. We have less than 0.1% failures of any of our APIs, which are served under 0.5 seconds.
Wow, that's quite impressive, I would say. Ajay, coming to you, we've heard some of the challenges that everyone's talking about and how they are individually addressing those challenges. Can you talk about how AMD is really working towards mitigating some of these challenges?
Yeah, Varun. So I think, with a lot of our customers as well, being a customer-centric organization, so we always take feedbacks from them and, try to build up the building blocks basis that, although being an hardware company, if I look at current scenario, the issues they face, for example, about longer lead generations, about processing time, I think considerably we have been able to reduce that now with our new series of products which are getting launched, and especially on the server segment. So AMD EPYC powered servers, I think we are able to reduce the processing time considerably, and that also helps, to get the better customer experience. We also have been helping these organizations to reduce their transaction time, because ultimately it's how fast and the turnaround you do with the customers and the kind of an experience he gets finally from you. Second, I think the important aspect, the challenges which they face, which we normally try to really adhere with and address through our OEM partners like HP, is how do we reduce the high operating expenses? And I think we offer GreenLake, where you pay per use model kind of a thing, and we are associated with HP on that with their GreenLake offering. So that helps them to really manage on the operating expenses. The third, I think, like Milan said correctly, their legacy systems, and we at AMD, always believe that the technology need to be a little ahead from that perspective, and we help these organizations to migrate and save or modernize, move with the new series of EPYC-based servers for on-prem as well as cloud. Because finally, as AMD, we need to give them a real good value proposition, which makes them more competitive into the market. And that's our aim, which we keep continuing to drive for.
Thanks, Ajay. I hope that really helps a lot of NBFCs, and of course, speed obviously makes a lot of difference. Abhishek, coming back to you, when we talk about some of the initiatives that different companies are taking in terms of digitization, one of the things that we often miss out on is the customer expectation, because irrespective of how good you are or how well your infrastructure is defined, ultimately customer wants a lot more. So today's customer is not just more eager to get what he wants and immediately at that, but at the same time he's also very knowledgeable in terms of the products and services he's looking for. So how do you really match up to the level of customer expectations that have come up today, and especially in the digital world, given how easy it is to track what others are also doing?
Very well put. And if we try, the way we approach it is that we have multiple products in our organization's basket. The primary need of each of the product from the customer's perspective is a bit different. Let me ground this point, what I'm saying. Say, for example, we have a large portfolio of two-wheeler customers. Now, the two-wheeler customer is much more keen that if I am into this dealership, then by the time I have finished identifying which bike I have to buy, I need to get my loan process closed. That's the primary aspect that he's looking for. Now we approach this particular segment differently. That okay, turnaround time within 3 minutes is going to be the thing that we will offer to the customer, and we achieve that, and that's our USP. But if you shift to the other things, say for example, we have a large tractor portfolio. Now there, a bit of ability to do digital process through offline mode, a bit ability to do FI in an offline mode, ability to capture lat long, where exactly his fields are, where exactly his home is. Those things becomes much more important. So the focus of digital process was on those aspects. That am I able to give flexibility to the customer? That okay, not today, tomorrow I want to do this particular thing. That sort of flexibility became the crucial thing. When we shift to the other product line, say for example, home loans, there our focus was that can I digitize the complete underwriting process, and then accordingly the instruments were sought after. That okay, let's use bank statement analyzer to understand whether from where is salary income, EPF integration, and all those sort of things. So for all the product segment, we chose one particular need which we thought is going to appeal to the customer, and try to build a strength on that, unmatched strength on that. And that's how we have approached, because we can't fulfill all the needs of the customer, right? I have to be really, really good in one thing for which I should be known for. Balance, I should not be so bad that he hates me. So for other things, we have just ensured that we are not so bad, which is around servicing. So all the whatever he looks for, that will be available. But I will never claim that servicing is our USP. I will always say TAT is our USP. Customization of the product requirement is our USP. Flexibility is around our USP. That's how we have approached. But
absolutely, you have to focus on your core expertise and not be everything for everyone. But that also brings up, another challenge of being compared to different organizations. Now, if you look at some of the FinTechs, they focus on the experience, and it's all about being the next iPhone. You don't really need any training to get onto the system. Whatever you need, everything is very intuitive. In such a scenario, I mean, how do you transform your complete customer experience? Maybe you can comment a bit on that, and we can get Durga also to comment on the same.
Yeah, in fact, we don't see FinTechs as competitors at all. So most of them are our collaborators. Why I'm saying so is there are two pieces in which FinTechs are primarily playing. One is around process automation sort of thing, where all these FinTechs were taking bits of the whole financial lending process and solving it, whether it's identity, whether it's OCR technology, whether it's AI, whether it's around fuzzy logics, all those things. Every FinTech has picked one particular spectrum and they have solved for it. They are our backbone, in a way, if I can say so. We are basically, in a way, one-way orchestrator of the services that they sell. And that's why they are a very, very strong collaborator for us. The other sort is around lending, who actually do active lending. Now, we around 1.5 years back, we launched our consumer loan business, okay, which is basically first business which was without any intermediary. Generally, we are a dealership or builder-based business. That was direct to the customer. Now, I have been able to make around 1,200 odd crores of book size in spite of COVID and all through that itself. So I don't think it's about FinTech versus NBFC. It's about who is able to fulfill the credit need of the customer in a better fashion. If we are able to do that, then great, and we have to collaborate with each other. If we are not, then there is failure all around, and that's how we see this particular space playing out. Looking forward for active collaboration for most of the players.
Absolutely. Durga, how do you see FinTechs, as partners or as competitors, as both?
No, I would say both, but I think predominantly, like I think Abhishek said, some of the the FinTechs target a very specific area, of the whole lending value chain.
Right.
So, like Abhishek said, some of the FinTechs, may be serving, let's say, an identity need or a financial analysis kind of thing, and there are some who actually come on the other side and say they are kind of a digital lending platform. And then we end up collaborating on both ends. On one, we may be kind of, consuming the services provided by, the FinTechs. On the other case, we may be partnering with them for, let's say, a co-lending opportunity. So, the digital platform then becomes the front-end customer-facing piece. And again, like was also pointed by both Balaji and others, the experience part comes into play. So they are able to then take that strength of theirs to the forefront in front of the customers, and then we become the partner behind to say, how do I fund a part of whatever is the loan that the customer is looking for? So it could be a form of collaboration on that front. So essentially, what we are seeing, overall, the whole value chain is rapidly transforming. So while fintechs and some of these digital lending platforms are, today getting more and more popular because they, make it almost like an Amazon, Ola, Uber kind of experience for a lending kind of product, right? You are just coming on, and you say, okay, here are the few details based on the credit. Within a minute or two, you know what you can lend to that person, and the disbursement in many of these cases happen within minutes. So that's the experience now is becoming the typical expectation for the customer. But again, as was also pointed out by Abhishek, the TAT varies by the product. If you're talking about something like a personal loan or a two-wheeler, which is typically almost like a cash and carry, or let's say a loan and carry kind of situation, that is very different from when you talk about a home loan or commercial vehicle loan, because that may have a different cycle. The paperwork also has a longer cycle and TAT there. But at least the comfort to the customer that, hey, here is a product that I'm going to or the asset I'm going to take on, and I have the confidence that there is a lender who is going to fund me for this portion of the amount at this rate. That gives the confidence there. And I think as a country, if you see, there's a significant now impetus in the way this whole landscape is going to change. If you see what is happening with the whole account aggregator framework and all those pieces in place, there is going to be much more standardized way for a lending service provider, the lender, and the whole tech infrastructure that's going to come into play. And I think readiness from a digital perspective will be key for all the operators in this space.
Do you think AAs will provide a level playing field, or will make it even more tougher to compete?
No, I think in my view, they will make it easier for all and in a more standardized way. And like today, your ability to go and say reach out to get a bank statement, and all of that with a better control around consent, better control around if I want to do on a repeated frequency, all of that comes in a lot more automatically with the AA kind of setup, rather than one-on bolt-on situations that we are working on today. So I think it will bring a lot more standardization, and maybe you'll have tech players who will come in and say, hey, here I'm building the whole AA integration layer. It's more plug and play for you. So there will be a lot of innovation I see that will happen in this space.
It'll be an exciting space to watch out for, definitely. Milan, bringing you in and segueing into a different part of the conversation is around customer loyalty. And in the financial space, we've seen customers being loyal to a product lifelong, typically, but that's rapidly changing, and that makes it important for companies to look at new ways of engaging with the customers, new ways of personalizing the products. How are you approaching this space and making sure that you maintain customer loyalty?
Yeah, I think it's right with the comparison and with having more opportunities for a customer to choose, and the easiness of the accessibility of the service. Obviously, the bridge to the market is getting shorter and shorter, right? And you will see migrations left and right, as we see it on the other markets. This will stop after a while, and you will have the customers more loyal again to the brands which they bank with and they credit with for a long time, because they will learn that the loyalty actually pays off, and that's when the brands actually develop for them something which is the added value for the customer, right? Because the loyalty of the customer is coming from two parts. One is that the customer likes the brand, and he somehow or she somehow feels basically the passion for the brand, which let's be honest, in financial sector, that's mostly not happening. And the second one is that the quality of the service and the benefits from being the partner of the brand are something to hold on. And I think in the financial sector, we will go through through the changes. We started with the cashbacks long time ago with the payments, right? Paytm was a huge proponent of that. I think now we are changing more to additional services and the broader spectrum of the services which you can offer to the customer. And it will grow to simplicity of the life. And as the population is getting a little bit richer, they will demand what they have in another digital platforms, which is basically the offer of various services which sort out their problems. And the identification of the financial company will be less important. It will be more important than the ecosystem around the company is offering what the customer is looking for. So for me, the loyalty is actually equal to the ecosystem which you are building around your brand.
Excellent point there, Milan. Balaji, coming to you, ultimately everything boils down to generating more revenues for the company, and technology has proven to be one of those enablers. Now, in the past we were looking at tech to support some of your processes, but now fintechs are built purely on technology. How are you really leveraging technology to make sure that you can probably generate new revenue lines as well?
If you look at what fintechs have been doing, I mean, like other esteemed members have pointed out, they have taken one problem and specialized and solved that problem in a nice way, right? So a lot of us are partnering, definitely, but I think their focus has been predominantly on ensuring that the user experience for the user is extraordinary. So simplifying the journeys, getting people to fill less form fields. I mean, lending is all about filling lots of forms, right? So, or maybe signing 100 pages, right? Lot of that has been simplified, solved, etc. And many of us are leveraging those capabilities and also learning from those capabilities by building journeys which are much more simple. So most of our applications have where there are screens, we do only one thing. We ask for only one piece of information, so it is simple. And also we support multilingual communication, so tier 2, tier 3, etc. can easily understand it. So experience, understanding the customer, those are paramount. And from a product perspective, so not just launching new products. I mean, that's definitely important, because innovation is happening really fast these days. We don't have an external product. We have a complete in-house team creating, building, and managing our core lending systems. So we're able to turn around new products, new innovations, new changes much faster. But not just that, there's another whole angle to it. When one realizes that the certain product is not yielding the required results, having the ability to turn it off or modify it in such a way that it performs, that also has given us a lot of advantage. So we also have a completely digital straight-through processing app called My Money. We have seen good success on that app, where multiple PLs and BLs, etc., flow through that platform.
Excellent. Thanks for that perspective, Balaji. Ajay, coming to you, we've heard about various initiatives that everyone on the table is talking about today. And one of the things that clearly comes out is that it's not about fintech versus NBFCs, but rather working together and making sure that you're growing faster than ever. My last point to you is if you could talk a bit about what are the challenges one can face in terms of this rapid scaling, and how could you address the scale and growth that's happening at such a rapid pace?
Yeah, I think thanks, Varun, for that question. We believe that it's all about new age technology now, and maybe NBFC as well, or any BFSI segment for that matter. It's again an opportunity to for everyone to build up the kind of a next generation system so that they're ready before the market really gathers the steam, or they look for the next cycle of the growth. I think one key learning, last couple of years has been, it's nobody waits for the event to happen and start upgradation now. So the learning has been, let's get also upgraded now itself, and look for the next set of growth. We believe that at AMD, whatever we are building up on the product line, processing, security, scalability, we try to keep in mind what's going to be the usage going to be in the future. May it be the next level of usage on IoT, AI, RPA, or for that matter, blockchain, big data analytics, or chatbots. It's going to be the next level of work or generation product which is going to come up in that. The other very important aspect, I think, which is very critical is the data privacy and the security. We at AMD are trying to bring in some silicon level of security at these layers, which gets complemented with our hardware partners as well as the software ecosystem partners, so that end of the day, all that data remains highly secure. Imagine a scenario where, the data is getting processed on the memory, even the memory is getting encrypted nowadays. So it's no more that the data storage is an encryption. It's about, how do you make sure the data at any given point of time where it's vulnerable is more secure. So these aspects, end of the day, the idea is to bring in, while you add up security, you cannot shell out on performance. So you have to bring in more performance, more efficiency, highly scalable, and more secure. And that's what we are driving towards. And that's why we are working with all ecosystem vendors as well, finally to bring the best of the experience to the customer, which I think all co-panelists have been, one way or the other, echoing or stressing upon.
Thanks, Ajay. Thanks for that perspective. With that, we've come to the end of the session. And I would like to thank everyone for sharing their personal insights on how NBFCs can really not just compete, but actually excel and grow in this rapidly evolving space. And the kind of tools that we talked about are extremely important to make sure that you're not just growing without any support, and you have right arms and legs to go ahead with. So thank you everyone for joining in, and stay safe. Thanks.